I just want to start with this macro backdrop and sort of what you're seeing when it comes to flows in different ETFs right now and how that's reflecting this environment.
Yeah, absolutely. Great to be back. We've seen a little bit of a shift since the start of the year. I think coming into this year, the story was all about this pro-cyclical rotation and maybe a rotation from the US into the rest of the world. In terms of where we're seeing flows right now, though, we are seeing investors take down cash, and we're seeing a strong intent to do that in both flows and polling data that we have. And they're adding to US equities. So it's a little bit more of the playbook that we saw from the last couple of years rather than a stark shift. They're adding to US equities, they're adding to tech, and that aligns with sort of where we see some of the best opportunities, some of the best earnings growth as we're really in the middle of earnings season right now as well.
Where are they taking money out?
Yeah, so, again, we're seeing a real pull down in terms of cash. I think investors, and particularly the financial advisor community, had built up more cash reserves earlier this year. There was some hesitation around allocating over March because of some of the geopolitical conflict. But the biggest subtractions we're seeing are from cash in the portfolio. Biggest additions, a really big swing back into US equities. So we're seeing flows be a little bit more balanced between value and growth. And we're seeing investors really reach for more of that AI exposure, even though at the beginning of the year, they maybe were more concerned about valuations and concentration. So seeing targeted there.
Well, is the cash that's being pulled, is it coming from money market funds? Is it going into, I know you said it's going into certain equity funds, but is some of it going into any bond funds right now? And the reason I ask is because we've been trying to figure out where all the cash, the trillions of dollars in cash that's on the sidelines in money market funds ends up going and when.
Yeah, and we've been talking about that for a while, right? There was a lot of dry powder on the sidelines. There were record highs almost every month in terms of the money market flows. So yes, we've seen some money come out of there. We've seen, a rebalance, though, in terms of the flows we've seen into the ETF market. So March was very strong into fixed income. That's cooled actually quite a bit in favor of equities so far this in April. Within fixed income, it was strong allocations into short-dated funds. But now, again, we're seeing more risk appetite. I think, one set of flows really sort of proves the point in terms of how focused investors are right now. We're on track for the largest ever month of flows into semiconductor ETFs and one of the largest outflow months for equal weighted ETFs in about 20 years. So investors are reaching for tech with both hands, something like BAI, which is our BlackRock AI ETF, really proving the point there as well.
How much momentum picked up as we saw, obviously we saw a market pullback at the start of the war. How much of the activity happened in the last week or two? Is it like, we talked a lot about short covering in general for pushing a lot of share prices higher, but I'm just curious, has it been steady over the last month? Has it picked up in the last couple of weeks?
Yeah, it's picked up in the last couple of weeks. So we trended to see investor sentiment, again, sort of citing some of the polling data that we have from our very large and broad investor base. We saw sentiment bottom around the third week of March. And so at that time, we had seen really strong flows into fixed income funds, especially short-dated funds there. And then it's rebounded very sharply in line with market performance. So we are, we're seeing investors, see better entry points and lower valuations to some of the themes that they want to hold for the long term. So I think that the valuation reset that obviously happened, we saw prices come down even while earnings were still being revised higher. So, we're about 40% of the S&P 500 is going to report earnings this week. Expectations are really strong coming into earnings season. It's the highest in 5 years. We're expecting about 14 or 15% growth year over year. So I think investors are really following the fundamentals, and the fundamentals are pointing to strong U.S. relative to the rest of the world and strong growth and strong tech. And so, I think that those are some of the themes that we've really highlighted in our spring outlook as well.
Strong U.S. relative to the rest of the world, but what are you seeing outside of the U.S. in terms of flows, and where do you think the opportunities are?
Yeah, we have a preference right now for emerging markets over developed markets. I think a lot of the preference for the U.S. really stems from, we came into the conflict in the Middle East from more of a position of strength in terms of macro data. The U.S.'s position as a net oil exporter or energy exporter obviously helps. So I think it's on a relative basis, we see the U.S. holding up better. But emerging markets have really captured investor attention as sort of the next leg of this AI theme. So if you want exposure to AI, which is, growing companies that are growing earnings phenomenally quickly, It's not just a US story anymore. So we see investors looking for more diversification, even within something like the AI theme, which they're adding more to in their portfolios.